Well, earnings season has just kicked off after the close, with aluminum giant Alcoa reporting its results for the second quarter. The company did beat expectations, but posted a loss on falling global demand. Slower growth in China is also partly to blame, and China's reduced growth rate and the euro crisis are expected to set the tone for second quarter earnings, which are forecast to be rather dismal. Karina Huber has more on the earnings outlook.
In recent weeks, Alcoa, FedEx, Nike, and Ford handed in their earnings report cards. The results are not encouraging. According to estimates from the research and data company S&P Capital IQ, U.S. corporate profits are expected to have fallen 1% in the April to June period as compared to the year before. A global slowdown in growth is mainly to blame. While Europe represents the largest market for most American companies, the cooling down of China's economy and other nations in the BRICS group, Brazil, Russia, India, China, and South Africa, is a big disappointment.
Especially given that it comes at a time when the U.S. recovery is shaky and Europe is in recession. So taken as a whole, it really comes at a bad time. It would be easier to handle a BRICS slowdown if things were stronger at home and we didn't have a recession in Europe.
U.S. companies that are most vulnerable to a Chinese slowdown are those connected to mining. Caterpillar, which makes the machinery used to extract raw materials, could be hit, as could manufacturers of industrial materials.
Unfortunately for those manufacturers of industrial materials, especially steel, we now have a situation developing where China may be stuck with excessive inventories of steel that will in turn soon be sold on the world markets, and that will depress prices on world markets and squeeze the margins of U.S.-based manufacturers of steel.
Energy companies are also expected to see significant profit declines in the second quarter of the year, thanks to commodity price volatility, driven in large part by slower growth in China.
Financial experts advise that with all this global uncertainty, it might be wise to focus on the basics, like consumer staples, or stay away from the stock market altogether until things cool down. Karina Huber, CCTV, New York.